Mortgages and credit unions are playing an increasingly important role in the mortgage market, with lending reaching record levels and close to €1 billion now issued in home loans. It comes as more people seek alternatives to traditional banks, with credit unions highlighting competitive rates and a more personal approach. And I'm joined now by a man with a very personal approach. And personable indeed. It's Louis Faye from St. Francis Credit Union in Ennis. Good morning, Louis.
Good morning, Alan.
Thanks very much for being with us. So, what is driving this surge that has seen mortgage lending through credit unions at its highest ever level?
Well, it's probably nothing new that that the credit union movement is doing mortgages. I think what has changed is that given the tightening to the number of banks in the that's operating in the market, it is in everybody's interest that there is competition, and I would believe that even from the Department of Finance, this is a really very, very important piece for them. So what has happened in the last 16 to 18 months is that credit unions have formed what one might call as an alliance, and there are approximately 80 credit unions involved, and we have effectively set up a standardised mortgage offering, because prior to that we were offering different rates, different terms, all that. We are now in a situation whereby the 80 credit unions involved are offering standard terms and conditions, standard interest rates, and competitive interest rates. That's the key.
And how competitive are the rates from credit union compared to the main banks?
Well, my belief is that what we have is that we have a standard variable rate. So we don't have a huge spread of rates. We have a single offering right now, which will change over time. But right now, our rate is a bit quirky, because it is a standard variable rate at 3.85, and it has a cap of 4.4%. It doesn't matter what happens in the interest rate sphere; it will be capped.
It won't go any higher.
It won't go any higher than that. And it will only change in the event of some serious movement in interest rates, and that's fixed for a term of 3 years, and then it rolls after that. So it does, in terms of where market conditions are.
And is that attracting much attention or custom here in Ennis? In Clare, are you seeing a good demand within the county for the mortgage rates?
Certainly, the pipeline would indicate to us that people are very interested in dealing with credit unions, and it's more to do with the as you mentioned earlier, that personalised service, right? That idea that you can actually speak to somebody, and what we provide in St. Francis, at least, we have a full-time mortgage advisor, and it's really around the whole package of financial advice. So that's what we're offering.
And so is that part of it as well? I mean, obviously the rate, as you mentioned, and it won't go any higher than 4.4%, whatever, regardless of what's happening in the wider context, is surely appealing. But is a personalised service? Do people feel that they get more of a personalised service with a credit union than they would with a large bank?
Look, for sure. Look, our bread and butter is personalised lending, right? That's our bread and butter, so it is. And I think anybody who has dealt with the credit union, like in terms of getting a personal loan, would feel that that personalised service is really very, very important to them. So it is. So this is an extension to that in a way. So it is. Because we're a community financial piece, we're not out there to make profit. Like we're not profit driven, is what I'm trying to say. I'm not saying we're loss driven now either. But what I am saying is that it's not about us gaining from our members. They're our shareholders. Why would we?
Yeah, fair point. I do wonder what kind of people are coming to you for mortgages, Louis. Is it switchers, movers, first-time buyers, and maybe even people who we traditionally hear find it difficult to get a mortgage, those who are single?
Listen, a bit of all of that, so it is, right? But there's a lot of people who are, who might be finding it difficult to get a mortgage through their current advisor. They might have had a blip in their credit some way back, 3 or 4 years ago. That's normal life. That's how we view it. Certainly, we're probably not in the new build sphere. That would be it. So we're definitely settled in the second-hand market, and like, interesting enough, like, we believe that a lot of people are now upgrading, their houses up to. So it might be somebody who doesn't have a mortgage, who inherited a house, and they want to upgrade the house to a family home. Those are the type of people, I think, that we're generally seeing.
How helpful has it been that the central bank has increased lending capacity for credit unions, and how significant is that for your future growth?
No, it's massive. It's massive for the whole sector. So it is. Now, we were never, we've about 60 or 70 mortgages on our book. We were never going to breach those limits one way or the other, really, in the near future. But it really means that we can concentrate. And now, when we're not looking over our shoulder or looking at our balance sheet and seeing, are we within limits and stuff like that? We've oodles of space there.
Okay, I mean, most mortgages at the moment, Louis, they're still issued by just a handful of banks. Is it something that the credit unions, that kind of dominance, is it something you can realistically challenge? Or is it even something that credit unions want to challenge? Are you kind of happy with what you're offering? But I mean, as we say, it's at its highest level ever.
Yeah, but I think it's very, very important that we have diversity in what we offer. We don't want to be boxed into a corner about that that we only offer personalised lending. I think it's very important. I think it's very important for competitiveness that credit unions are, or that any other players are in there. I mean, if you take it, you've lost so many players in the recent past. That you've lost Ulster Bank, you've lost KBC, and that market is, that means that the offering is shrinking. So it's really very, very important that there are more players out there offering,
Yeah, the customer needs more choice.
100%, yeah.
It's not just mortgages, of course. Over 100,000 personal loans were issued in the last quarter. What kind of things are people borrowing for? And when I see a number that's north of 100,000, it does make me wonder, is there significant financial pressure amongst borrowers, or is demand still strong?
No, look, I would think demand is still strong. Now, given the the geopolitical events that are unfolding in the world, who knows what's around the corner? But certainly in the last 12 months, there has been significant demand there. So it has, and really a lot of it is around that house renovation, house improvement piece. Like a lot of our lending would be around car lending. Again, the second-hand market, so we'd be very active in that market. So we would.
How do credit unions balance growing their loan book with keeping lending sustainable?
Oh, yeah, well, I think that's the real important piece for us. So it is, like, we will not lend to somebody if we don't believe that it's sustainable. Like, we will give them advice on what they possibly should be doing. It's really very important that we view every loan and that we test it. We road test it to make sure that any let's say drop in salary or increase in interest rates would be manageable. So it's stress tests at all times.
Question in here from a listener in relation to green energy loans for house improvements, asking me to ask you why they're at 7.1%. I don't know if that's a credit union rate they've seen. I think the credit union rate, would I be correct in saying it's 9.21% for a credit union green home improvement loan?
No, it's a bit lower than that. But again, the thing about credit unions is that it varies amongst all of it. Like, I know that our green loan is about 6.9%. We are looking at bringing that rate down. In some respects, I think the difficulty for us is that if somebody is doing home improvements and 20% of it is for green, let's say, like solars or heat, water, or whatever it might be, and the balance is not, then it's very hard to split that up, because it causes a real problem, like in terms of somebody now having two loans. So that bit is very, very difficult. Like the other point is that because of credit union's business model, in other words, that we're more face-to-face, so we've got more staff, we've got more offices than our banking friends, right? So we need to make sure that we're sustainable, like as a business. It would be very little. We'd be busy fools if we were charging so little.
You've more buildings to keep the lights on in.
No, correct. Yeah, there you are. That's and that business model is important that we keep that going.
Okay, we'll have to ask you about the demand for loans and whether you see it continuing. Who knows? I've been talking about open-ended time periods, with everything that's going on. And we were speaking with Michael McNamara and Billy Kelleher, two of our MEPs earlier on, about what is going to be done at European level and indeed national level to help people tackle the high energy costs. But of course, that's part of just high cost of living generally. And with that, do you expect demand for loans, especially mortgages, to keep rising?
It will be challenging, is my view. It will be challenging. One of the things that we found during COVID, like interesting enough, is that when things became very challenging for people in terms of cost of living, what did they start doing? They started saving. They just didn't borrow. They started saving. So that might be something that might happen. Who knows? But I think the other side of that coin is, Alan, is that, people always have plans about improving their lives and how they can improve them, whether it's doing extension on a house or whatever it might be. And one of the real differences that we see now is that the employment levels are so high, or that unemployment is so low. That's the difference between now and, let's say, the 2010s is that people have this affordability piece in their pay packet.
Okay, look, we have to leave that there, but I'm sure we'll be speaking to you again soon. Louis Faye from St. Francis Credit Union in Ennis.